Recording. Oh shit. Welcome everyone. So this is going to be the first installment of what I'm looking to do. I don't know, we might do this periodically. We might do this after maybe different achievements. Maybe the response is great and we start doing more breakdowns and I start kind of displaying or showing knowledge for free at this point, and I just want to just keep pushing that out because I feel like, as you can tell by the title, we did 2 to 10K, and that's a huge accomplishment in the trading space, just in anybody's journey, right? The ability to slow grow. Well, in this case, it was about a week, but to slow grow 2 to 10,000 with proper precision, risk management, really good trades, sound mind, sound approach, not getting rattled with whatever it is, drawdown or anything, really flawless execution that we had this week. So that's what I'm going to be sharing in this case. And then I'll probably get into, because I feel like it's cool, I want to be able to share like my background more so, and maybe my just overall trading experience, and really just kind of go through the motions and show and prove here. So the asset that I only will touch right now is gold. Gold markets are absolutely incredible. They have been flowing very, very well for at least the last year. I mean, you can tell even this is just the weekly chart that you can see gold prices have steadily risen over the last year especially, and we were able to take advantage of that. You know, Q3, Q4 last year especially, December was kind of a slower retracement. We can get more into that and I can show you what I was thinking about on the daily, but the main thing is I'm going to go over some executions. We took our account from at the top of the year. I guess I'll go back to the original idea. So I deposited 2,000 into an account and wanted to build that to 10. That was the original deal. But as I was doing that, you know, I would take 2 to 4, you know, I'd make 100% return. I would take 2 to 4 to maybe 6, and then, you know, as I'm making money along the way, I'm thinking, you know, I'm looking at my life. I need a couple thousand here and there. That would be nice. I want to extract money, pay the trader. It's very important. So as I was going, funny enough, from like Q3 to about maybe October, November, I ended up withdrawing 10,000 just from the wins that I was making on the $2,000 account. I was running my equity relatively low, relatively the same. If I made 2,000, I'll withdraw all of my profit and just keep the balance the same. So when we started out 2025, my thought process was, let's actually scale this, let's build this, and let's establish a new ground, because at this point we're playing with house money. I'm so incredibly, you know, as far as percentage goes, so incredibly up that, you know, this is house money at this point. So we started the year at 2,500. First week of January was kind of iffy, just getting back into the swing of things, trying to see exactly what the market is leaning towards, what's the storyline, how are we going to approach this? Because if you see, you know, gold was kind of being a little iffy in certain areas, but we maintained the uptrend bias, and we'll get into that shortly. So we started, my timeline might be off a little bit, but the first week or so was a little off, didn't really do too much. Equity pretty much stayed the same, 2,600, break even. Like I said, I get rocky sometimes, just over leveraging, and I can go more into that as well. So beginning of last week, I started with 3,400. And that was, you know, I had like a $900 equity build from the week before. And we're starting out this week with $3,400 in equity. And everything looked pretty good. And we ended up hitting our goal from 3,400. We ended up hitting the goal of $10,000 equity in the account by like Tuesday night, I think it was. I'm going to try and clip up the screenshots and throw them in here. I have some screenshots from the trades as they were open, and then like the actual broker like entry prices. So I'll try and trim them up. I don't know exactly how to do that. I'll look at how to do that in this platform in a second. But then, you know, so we did it. We did it. We, you know, clapped for ourselves, and, you know, we have that goal achieved. Then, as I'm sitting looking at the 10K, I see another setup. I take I take $1,000 loss on another position, and at that point, I was like, yeah, I haven't even paid myself for this. Withdrew 2,500, so that brought my account balance down to like 65, 64, 65, whatever it is, and then ended up on the last trade of the week, ended up making 3,600. So if you do the math on that, that 3,500 was like $1,000 loss, 9,000 equity minus the 2,500 that puts you at the 65, then made up the loss and withdrawal to put me back over the 10K. So as far as I'm concerned, that's a 10K week, and that's still, we're still well above, a little above the 10K equity. It's like 10,100 something, 10,100 change, which is still awesome. That's still a huge equity build, percentage build, and I'm looking to, the mentality moving forward is, this is really the same way as building a $1,000 account to 2,000 or 1 to 3 or 1 to whatever. The scale is just different. You add another zero and you adjust the lot size a little bit, and you're able to capitalize on the moves. And as a person, you're able to be a little more satisfied with the profit that you're taking, considering, the same $100 to $300 trade is now $1,000 to $3,000. It's pretty easy for me at this point, as I've been on this account, to $1,000 days are pretty regular coming by. Same thing with 2,000. I'm trying to amplify that to $2,000 to $4,000 to $8,000 days and really push the equity on this higher and higher. And I have my own goals for myself, what I think I can achieve this year, and we'll continue to document it. So I could go more into the mindset stuff and all that. So I want to keep this video relatively short. So let's get into the charts, all the cool stuff. So let me move. This loom is, I got to move this little display here. I don't know if anybody can see this actually on the recording, but. So let's get into gold, best asset class around at the moment. So let's just go based on the weekly, and you'll see how I break this down, and we'll try to be as efficient and accurate as possible. So let's start with our fib. Fib, point A, point B. You can see price on this weekly scale came into this 38.2 retracement, and we tapped into the 50, which lined into this 2,500 region, but we ultimately stood firm in this, and this was that Q4 adjustment. We had a really strong move in October, Q4, November. That was the Trump retracement, if I remember correctly. We had a nice rejection out of here on the weekly. We continued down and consolidated within this region for a few weeks, and this was the most annoying thing to trade, especially this wick. But this was a very annoying section to trade. However, we have our overall macro projections for this asset for gold coming into 29, 28, 92, and our very large, I think that everybody is looking for, is that big 3,000 number. Based on the weekly fib projection, we are looking more or less $3,105 for gold per ounce. And the way that this is moving, I can see this taking place in these targets being hit within, I keep seeing people say by April. Who knows at this point? We've had I think April is a good time frame, but we have Chinese New Year coming, the Lunar New Year. Believe it or not, that does make some adjustments with the banks in the East. And, there's other macroeconomic things that play in factor here. So this is just the overall projection of what we were looking at. So it's very hard to get lost when you're trading in the intraday in these lower scales, in this region. However, you still have to keep your main projection on and just understand where you're headed in the grand scale of things. So everybody needs to keep that in mind, that we are absolutely bullish in this. That doesn't change when price comes into this high, which we are here now, this 2780, 2790, give or take. The high of this, let's look, 2790.08. When price does come in here, I would have to assume that there's a lot of larger institutions that are looking to make plays within this area. And it would not surprise me if we do get a retracement of some sort. We will actually move this, we'll move me out of the way, and we will evaluate from a new point. So we can evaluate at least a little projection, at least coming down into the 2713, 2740, etc., depending on how aggressive the potential short might be. So this is macro. I don't particularly look at this very often. We're going to drop down into our daily scale and really get into some more details of how we were looking at this and how this actually played into this week. So we were tracking these retracements this entire time. This is that consolidation that we showed. This was that large bull candle on the weekly. This was that Trump short. And, you know, we were really looking to see if gold prices were going to be able to maintain this 50% level of the retracement. Gold, you know, it obviously scattered around here. We had a rip into the 61.8, which actually, funny enough, if we are looking at these retracement levels and we're looking at our targets, we actually just hit target 1. And we're looking to go into 28.34. And we are, hold up one second. Okay. We had to take a brief intermission, brief pause. So where were we? This overall projection here based on this point A, point B on the fib, we came in and we, like I said, we thought we were going to balance this out. But if you are looking at this entire projection, we are still en route to this 28.34 level. So that's important to keep in mind as well. So looking at this point, this is what really gave me the green light for the buy setups. So you can see price came into your 38.2 and we came in, created a lower high point, and however you have to base it off of this and this level as well. If price were to go lower, it would have done it sweeping out this low at this level with all this sell volume here. If price was interested in going below, it would have swept it here. Price obviously was not interested in that, and you can see right here we created a higher low point, and you can see more details on the lower time frame. So this was the previous week, and we're just doing some small chart work on the daily before I get into the more detailed time frames. But if you can see, you're just tracking your fib from point A, point B here within this, and now you can continue to see, and now on the lower time frames is the correlation. You'll see that later. You have your point A, point B, found itself at 38.2, and you know, I think this was a news event that drove this down, and we spike into the 70.5, your 61.8, and everything gets held above the 38.2. So this was a really good sign that price was going to be coming up into these levels and going to be actually targeting the 27.20 levels that were established here and here. So that was really my go ahead. Excuse me, that was really my go-ahead to really lock in and focus on these time scales on the lower end. So we were able to catch the short movements here. This was a Thursday. We were able to catch the short movement just based on the fact that, and this was a counter trend trade, absolutely, but when gold created a new high, we're anticipating late week also. Typically with gold, you're going to see whatever the move is for the week. Typically, now everything's nuanced. So typically when you have an expansive few days on gold like we saw here, Monday to Thursday, at a certain point, Thursday to Friday, you're going to see some sort of profit taking or a move in the opposite direction to kind of keep things balanced. Larger institutions moving money around, changing their positions, etc. So you can see that was kind of the basis for why we ended up taking the short in that particular region. And that wasn't even where the 2 to 10 was really being executed. Excuse me. So we had, and just tracking the movement, now this is just H4. Gold is very good about respecting fib levels, as you can see. Your 38.2 got held, your 61.8, this level got held, and now you're just dragging and tracking your structure. That's a really important thing with this asset class, is knowing when being in the midst of a trend and just being able to wait for new points of structure to create new highs or lows, tracking with your fibs, being able to enter and execute on your retracement levels, and then take that into the projection. So you can see that happened right here, point A, point B. This one was a little more shallow, but you can see we found ourselves within this 38.2. We kind of spike into the 50, and we are feeling good about our positions moving forward. Once again, same concept. You will see that this is a massive part of how I execute and how I do things. Fibs are the true magic within the marketplace when applied properly in the right markets when they're trending, and it's absolutely incredible. And typically when fibs aren't being used, it's only in really choppy, more consolidated markets, almost like this, when everything is just fishing. You can see how price is just fishing highs, creating highs, knocking out the lows, knocking everything out, and just consolidating and being real funny. It's not really the best thing, but you also don't really want to be in the markets and executing orders when you're seeing price start to do that. And that was a Q4 issue. So you can see, based off of this, point A, point B, like I said, it respects your 38.2 once again, spike into the 50, H4, and now you're executing on the lower time frames. And I'm going to rinse and repeat this one more time. Point A to point B, found itself at the 23.6, tried to spike into 38.2, and we still knocked out our projection up here at the 2782 level. So this is a really consistent thing that you'll find in gold when you can really just be on the right side of a trend and just continue to follow it. As you can see, I don't have any MAs or anything on the market. I sometimes will bring up the 50 MA and just kind of see how this is reacting. I mean, if you want to use this as an extra, confluence or what have you, you could certainly do that. But it's just kind of chart clutter at this point, so I don't really use it. It's there. So getting into the start of the week, we will put our marker, I guess, here. So this, on everything on the right side of that vertical, is going to be what we were looking at this week. So the week prior, as I told you, we had our point A, point B, and we were looking for price to come in and create a new point in structure, a new higher low. As you can see, structure looks a lot more clear on this, and we did take this up. I could explain this and what we were looking at, but we're going over this previous week. So let's go back to H4 here. We'll draw our fib up nice and clean and precise, just so we can observe. So we have Friday came in, was very aggressive on the short side. Like I said, when you have a large volume week, whether that's to the upside or the downside, this goes into the market timings of everything. Everything is timings within the chart. Everything is timing. So when you're seeing a late week retracement, that's usually pretty good, especially when structure is being maintained and you're looking to catch the remainder of the move, the next move, early to mid next week, and that's exactly what we did here. So Sunday, you had a pretty aggressive spike. We flowed right into this low that was created on Thursday, and we ended up finding ourselves over the 38.2 level based on H4. Keep that in the back of your head when we're looking at this. So early week, we were looking for price to do one of two things. We're going to either A, continue the counter trend and flow down into this target level, negative 27, negative 61.8. And there's something I want to point out also about this level. If you can see, and this is where the true magic is, pay attention to this key. I'll make it orange. When we go back to H4, you'll see which level lines up perfectly with the negative 27. You guys see that? 61.8 lines up perfectly with the counter trend target of negative 27. In the event that gold were to flow and continue the downtrend, I would have looked for price to stall and halt within this level, considering when you drop down, you see this is about as perfect as it gets. Point A, point B, retracement. If price was interested in going further, it would have validated this target, and this price level would have been hit, coinciding with the 61.8 on the H4, the main level that we were looking for. Obviously didn't happen, which is a good thing. We were able to take advantage of it. But you have to build if-then scenarios so that you're not really surprised by anything that this does. We really are at the mercy of larger institutions. And the only thing that we can do as retail traders is take advantage of the waves. We can only ride the waves that are being created by entities much more powerful than us. So that's one of the things that you have to look into. So, and you have to keep that in the back of your head. So that's just something that's the interesting thing about fibs and how you can kind of navigate with that. So Monday came and we had a nice rejection off of this level, and I was tracking here as well. And you can see price move aggressively away from that level, create a new high. In the back of our head, we're thinking bullish. We're looking to capitalize. Price gave us a nice spike and consolidation throughout Asian session and New York. This was a fully consolidated session. This was absolutely terrible, but this is where trusting within your analysis will pay off. Patience pays off. Absolutely. Once again, I think I've said this 5-6 times. Price comes into 38.2, spikes into the 50, and we continue. So we had our orders in, if I remember correctly, within this 08 level in this, and I'll get down into the M15 timescale. So in M15, you'll see even more detail. And we actually got into the position, like I said, around the 08 level. I believe it was in one of these candles here. No, here. After session. So on M15, start of Asian session after the 5 o'clock close, I was interested in taking a position based off of this. My entry here, roughly. My stops were going to be placed under this wick, under this low. Adjust your lot size accordingly. Anytime we get gold under 100 pips is great. I don't like anything over 100 pip stop. Gold will wick and move around a lot before it moves into the direction that you're looking to get. So you have to have a large enough stop so that you don't get played out and stopped. And to me, this area was valid enough considering you had one spike, two spike, you had another major spike down here, and everything closed above it. And we actually saw this. So this, funny enough, I took my position here, and a few minutes later I checked my phone, and this is what I'm looking at. A massive bear candle actually flowing into this zone. And I was like, I was almost considering closing, but I kept it here. Excuse me. And kept my stops right. And, you know, I was going to manually close if we did start to break and give convincing breaks under this level. So thank God we didn't have to do that. So keep that in mind with our entry. Where are we at? So we're entered in, and you can see this was after session, and sure enough, negative 61.8 gets blasted. Negative 27, obviously blasted. And we were originally looking at, I don't know why this tool has been so funky with me lately. My trading view is freezing. Forgive me, folks. I'm having technical difficulties here. So, as you can see, price did play out. Point A, point B. Our initial target, let's just say here for sake of argument, and we were able to catch, I don't know why this tool is being so funky. Anyway, we were able to catch a nice move up into these highs, but the main thing that we're looking at in our trade management is to track the moves. So we're point A, point B once again, the next day, next session, and we ended up closing, and this is where a good amount of equity was built. We were fortunate enough to be in the space where, let me go right here, sorry. Same thing, track, low to high, 38.2, spike into the 50. We're entering our position now. I want to go into why and how we're entering the position. So some people enter on engulfings. Some people, I see this, whatever, fair value gaps, inverse gaps. That's not even relevant here. We don't even have to worry about that amateur thing, amateur hour. It's just terrible. It's a terrible way of entering, but that's for another day. Let me clear this out. So I personally I care about price more than anything. I care more about the actual price where you're going to get in more so than a candlestick. And I know the candlestick is a visual representation of the price. However, I know that this asset, this engulfing candle, let's just see for sake of argument, this is a 70 pip from the wick to the top. This entire candle for 1 hour is 78 pips. If I were to enter at the close of this, your risk is so much higher than what it necessarily needs to be, and you're just adding so much more risk onto the account than what you really need. So I like to enter when price is coming into these regions based on whatever price is being shown. So like in this case, this happened off of, we were not awake for this. We were out of this trade. This happened in London, and we were out. This retracement, obviously, I'm sleeping. If I am to enter, I'm entering based in between 27.21 and this 27.17. I like to see if there is 100 pips space. What is the 100 pip space between where I'm looking to enter? This is the 100 pip space. So I'm giving my trade enough room to get in and retrace at least 100 pips. And in this case, you're coming in maybe 60 pips to 61.8. The trade is already valid based on the direction we're looking to go. I'm not worried about this. If you were to enter on this 27.21 as soon as price comes in, your drawdown is a 48 pip, say 50 pips max of drawdown to eventually yield you, a 190, 300, and so on. This was a massive move to the upside. So the main thing that I look at is how can we track point A to point B, or when I say point A to point B, that's any point in structure. In an uptrend, your point A is your higher low point, your point B is the higher high. You're looking for your point C to be your next higher low point, and then just reverse that if you're in a downtrend. So, your point A would be your lower high, point B, your most recent low, point C, your next lower high, etc. So that's the kind of mentality I'm looking at and how I'm tracking this. So this is just all chart work that you can notice that we're doing based on H1. H4 gave us the main bias. H1 gave us the detail structure of what we're looking at as far as our retracement levels. Now we can get into, and I'll just do this one more time just so you can see the validity of it. 38.2, spike into the 50, continue to run into your targets. 27.92 is the target based on this projection. That's for a different video, projections within projections and more time frame correlation stuff, keeping your H4 target in mind when you're looking at the smaller, H1, M15 scale moves. That's a different video. I could go far more in depth, but I feel like this is just a good overall of what we're looking at. So we're looking at a really nice retracement play here. Now, This is what ended up happening towards the end of the week. So you had point A, point B. We already ran crazy over this week. And we are looking at this sort of choppy downside consolidation where price just worked its way. Very low volume, very slow trade, or very slow market movement. And we eventually came into this 38.2. Now, you're probably wondering, Mike, if you entered off this 38.2, what's the 100 pips? You would have probably been stopped out depending on how you wanted to do it. I personally don't like when something's like this and you have such a big range. This is important. When you have such a large range from your recent lower high or higher low to your recent higher high, typically you want to wait until there's more confirmation. This is off session. This is London session. And this is where you can start throwing other key components in. So everyone's familiar with trend lines and counter trend lines here. So at this point, there's really nothing to draw until this spike happens. After the fact, you can clearly extend your price, and this will give you a better reason to wait. I'll go down into M15 to show a better example and more clear data. So your point A is off of the top of this high, and you're looking to find a good place to extend. At this point, you could have point B extend from here. Looks a little choppy. This is what you really want to look at. Nice, clean price structure. So if you want to be really precise, and you want to because if you want to avoid the potential risk that comes with entering on, say, like this 38.2 or this 50, seeing that you're in a counter trend at the moment, this counter trend line will save you a lot of headache, considering the only thing you have to do is wait for the counter trend line to break, and now you're trading almost a trend line break strategy on top of the fib, on top of knowing the trend, on top of your timing. It's very, very precise, and it takes a lot of stress away. So in this case, patiently waiting, I regretfully had an order. It was before this spike. It was in here. And I can take you down into M5 even to show you what I was looking at. I was looking at, keep in mind, we're retraced off of this level right here. I was looking at it thinking, and this is just familiarity with the asset and understanding how it moves. I'm looking at this new structure being formed on M5. I was looking to take advantage of this same move. We blew out a high here. We maintained this level. Price gave nice stabilization within this at 910. Came in, stabilized. I was looking to take advantage of this price action here. My risk on this would have been really low, considering 38, 40 pips or so. And if you want to extend it, you can extend to this actual low at 86 pips. Realistically, if this low and this low get blown out, you're going to just readjust anyway. So you could really have a 40, depending on how you want to trade it, 80 pip stop, no problem. I closed based on, I didn't like how this formed, and I was not really liking how this was looking in real-time price action. I wasn't liking the aggressive spikes. I wasn't liking this. I wasn't at my computer. Uncomfortable for me to take the position and hold it. So I think I closed. It was like break even, $100, something like that. Price ended up, and another thing that kind of messed me up too is I had this drawn, and I didn't like how it was really reacting in this area. We're still under this counter trend, and just just more thinking I'm understanding. What am I trying to say here? I was anticipating a deeper retrace into the 61.8 in these lower levels, just based on how much buy volume we had. I thought we would definitely pull down a little more for the shorts. In any case, we were able to break this counter trend line. Point A, point B, you can see, clear this fib off. Now you're just taking the counter trend break, and now you can clearly see higher low has been printed. Counter trend is now invalidated. You have a nice high that gets created, and now the entry can come in based on this here. You're essentially taking, you have a fib backing you up, you have a new higher low point that validated the H1 structure here. So let's go through a checklist. You have one higher low point being validated, counter trend line being invalidated. You have a point A, point B, new point in structure that you can get more detailed on the lower time frame. Now your entry can be really precise, and this is where I got the stabilized price action in. It was about 53. And we were able to actually take this next leg all the way up. Now this goes into, I'll go into a little more projections within projections. So you can see, where was our main price target based on this H1 move? Our main price target is here. Make that blue. This was our main price target. If we were to enter the position within this 38.2 or even this 50% range, because that lined up with here, we're looking at a 360 pip move to the upside. Very nice. We decided to wait and give a little more see if we could get more validity to this position. We waited and avoided trading in any of this. I could have easily set a limit order on the 50, 100 pips. Let's see how it goes. You could easily have done that. The better play, and I look at this in hindsight now, honestly speaking, the better play is your point A, point B, wait for the counter trend line to break, trade it on the opposite side. Now your target is less, but you're still looking at a 200 plus pip move. You can't be greedy. This was actually the move that took me over 10,000 in equity build. And I'll show a screenshot of that. Like I said, I'll figure out how to get that going. So we'll put that in here for you. So we ran up into this level and obviously bypassed it. I was out well before then. As soon as I saw 10,000 in my account, I was out of here. Funny enough, I closed a little before at like 9,950 or something like that. And I could not let that go. And this was not advisable by any means. I ended up putting, I think, 2 lots on, waited for a little bit of price action in my direction, ended up closing. But yeah, that was a really nice night. That was a really good execution on my end. And just for the sake of the video, this is what I'm looking at for next week. You know what, let's go H4 just to keep it completely thorough. So, this is what I'm looking for next week in some sort of degree, and we're going to keep everything valid. So, I'm looking for price to come into this 27.66 or potentially lower. The uptrend is valid until this 27.35 level is broken. Price could come, do all this stuff that it needs to do. Price could counter trend on the lower time frames, do what it has to do. The uptrend is done when this point is invalidated. As of now, market's closed. So, what I would be doing if I'm looking to trade this, I would be waiting for market open. I would be waiting for market open to complete downside counter trend, look for buy volume to come into the market, and then take advantage of the upside play, which should, in theory, bring us to all-time highs within gold, potentially this week, depending on how it reacts to it hitting the all-time high now, the 27.90. Depending on how that gets hit and what people do and how the reactions are to, like I said, the larger players in the game, we're looking for all-time highs potentially this week. This is a very exciting time to be a trader. This is a very exciting time for the asset. And that's really it. I mean, I could go more into detail about how I'm looking at things on M15 and if it's valid for M5, if that needs to come in. I don't really go further than M5. It doesn't really seem to suit me at all. I don't need to go lower. M1. Anything scalping is really not what I'm looking to do. I'm more so interested in, as you can see, I'm more so interested in catching larger price swings and holding for multiple sessions until we reach completion. And that's really what has given me a lot of confidence within this asset, is based on how it moves and being able to take advantage of it on a per session basis and seeing it. Gold in a lot of cases gold will go and create highs. Say a high is created in New York, you will anticipate a retracement to be made in the Asian/London session. That's where your next entry would be, to take that next price leg up and hopefully see completion within the next New York session. So there's times where I'll get into a position, say Tuesday Asian session, and I might not close until Thursday New York. I might hold through couple sessions because this is the direction that we're looking at, and we're keeping overall bias in the back of our head, feeling confident that these retracements are only temporary. So there's a lot more to it, but my approach is very simple. Be in a trending market, track your points and structure with your fibs, entry based on, actually, I'll do this to make it easy. I enter simply based on price, wherever that is aligning with the fibs. And this is where live market experience can tell you, and familiarity with your asset class, this is where it can help you, is because you understand the tendencies of whatever it is that you're trading. And you understand while it's live, while it's happening, you get familiar with how the candles move. And then you look at the time and you say, it's 7:30 p.m. I'm anticipating price to come down a little more and we can take the price up. That's how I get really good wick entries. I'm not waiting for a candlestick pattern. I care about price and the time at which this price is actually printing. I don't care about a candlestick pattern. It doesn't mean anything. It does in the sense of, volume when you're managing a position, but as far as entering one, I don't care. One of the things that I'll look at too, just you can kind of use your own judgment, but in this case, if I'm looking to get in at 2704, I will give myself 100 pips of breathing room. So if I am willing to lose, and this is where you have to look at your dollar amount that you're willing and you're comfortable with losing. So in this case, am I comfortable with losing $1,000? Sure. If the trade doesn't go my way, I'm comfortable with a $1,000 loss. That's fine. So how you calculate the lot size is just based on that. Easy math, this is a standard lot. You could take the standard lot and, you obviously wouldn't have been in, depending on when you got in here. But give yourself 100 pips breathing room, or to the most recent point of structure. So this is why coming into the lower time frames, this is why it's really important to really pay attention to what your M15 is doing and how you're able to really effectively get into these positions without exposing yourself too much. I'm trying to find an example of where it would be under 100 pips. In this case, there was a lot of steep retracements. Your last point in structure is a little far. If you were to get in here, same thing. If you were looking at say you find the market at 50, get your 100 pips. 100 pips is all the way down here. If price is that aggressive where price is coming down in here, you probably don't want to be in this anyway. So it's something to keep in mind, just divide the dollar amount that you're comfortable with parting with to the pip count, and then that'll give you a nice lot size that you can trade with. That's really how I enter. I mean, limit orders come into play at certain points. I'll give you another. This is a good example here. Small counter trendline trade. If you didn't feel comfortable going based on the fib, this is another trick. I might save this for another video. I don't know. I'll touch on it briefly because I hate when people do that. So if you're not comfortable with entering, say, just based simply on price here, what you could do is wait for the counter trend to be broken like we did prior. Your entry could be anywhere in this region if you're basing it on M15. So now if you look at this spike here, 80 pips. Let's go look at M5. Let's see how we can do this better. You're not comfortable with entering on the 50, perfectly fine. Point A, point B, price found itself within 23.6, and if you want to base it off the fib, that's perfectly fine. Now, take a look at price around your major points here. If your entry is within here, this candle, I will get into why that candle and this matters, but you could realistically extend your loss to 40 pips, excuse me, and cut that down, because if this level gets invalidated, we can say that this would be too. I'm not going to go, this video is going to be long enough. So maybe I will start uploading a couple more things, because there's a couple tricks that I could throw in here. But my strategy is pretty much trending market, track your fibs, enter on the fib levels, give yourself enough breathing room for the trade to fluctuate. Your sessions, your timings, your days of the week, your macroeconomic news, paying attention to what the president's saying, paying attention to the actual markets, your markets as far as your FOMC, your NFP, pay attention to your interest rates, main things that affect the asset, and then build a bias from there. It's very simple. You don't need anything else. Trust me. You need very limited. This is what my charts look like all of the time. Aside from some boxes and some P&L stuff, you don't need much. This is a very, very simple approach. This is a very easy approach. And yeah, I hope that some people have found, I hope that some people have gotten something from this, because I'm going to definitely continue to upload more, because there's way more in-depth stuff that I could do, but we're going on 50 minutes. And this is where we're at. I'm very proud of this accomplishment. I'm very proud of these moves. I'll upload some of the screenshots from my broker just to show the validity. And yeah, this is a cool thing. I feel like I would like an audience. I would like people to ask questions so I could go more in depth and see where I'm lacking as far as explanations. But this is a very cool thing. I will be doing this more frequently as certain things progress. And cheers. Yeah, this is a great thing. If there's any other questions, please feel free to reach out. I'm not here to sell anything. I don't care. Let's build something. Yes, sir.